Good morning, traders. Welcome to today's market review. This is Fred Razek at CM Trading. Today is March 6, 2019, and today is Wednesday morning. So looking at the major economic events of the day, just one event coming out of Canada at 5 p.m. South African time. Bank of Canada will have a rate statement. That's a very important number. Now, looking at the markets, looking at the Forex symbols, taking a look at the US dollar getting stronger across the board, but specifically against the Australian dollar. We looked at the rate decision earlier yesterday or the day before, and basically it broke support at that 70 to 80-ish level, excuse me. And we'll take a look at that in just a moment. Now, looking at the indices, Dow Jones was flat yesterday. The JC faltered at resistance. However, it may still break its upper resistance of 50,000. We'll take a look at that in just a moment. Now, looking at the commodities, both oil and gold pretty much exhausted the up move. They're pretty much just exhausted, okay? We'll take a look at the stocks. Now, this is very important to understand. Facebook is on an upward momentum over the last couple of days. It rallied from 160 to 170. We'll take a look at the actual graph, and it's hovering at resistance right now. And the question is, will it continue and will it break that upper range? That's very important to understand. And let's take a look at today's trading and see what we can expect. So we're taking a look here at the Aussie USD on a 4-hour chart. You can see right there, and clear as day, this thing has broken 70.86 nicely after capitulating here several times, making this roundabout area, but finally breaking this area down to 70.30 right now. Now, the next support level, you can see it right there, is 70.23. Okay, that's a real support level. Now, if it does break that, we're going into multi-year, multi-month support levels. Okay, now for us to populate that, we've got to go into the daily and even into the weekly to give you an idea of how further we can break on the downside. So this is the 70.23. You can see it a little bit clearer here, right there. Now, previous to this, over the past 6 months before December, we've been selling off consistently, okay, and a downward channel. As you can see here, this downward channel has specifically gone, and we've made several attempts on the high side, but we nevertheless made a trend downwards. As you can see, several areas where we've confirmed our downwards trend. We finally broke it right here. Okay, now that led us into this trading between 73-ish level and 70.86-ish level, which was not a bad area to be trading between. However, we're right now revisiting the low end of that, where we bounced right off of it, especially using it as a support level. So this is really momentous. If it does break this 70.23 with some momentum, we could certainly see it back into the 68.75-ish level. Now, looking at multi-year levels or multi-year prices, this thing can even go further down to 48.81 if it continues this downwards momentum. Okay, I don't think it will. I think it'll slow down to maybe 68, 65-ish level at the most, but you got to just respect the graph and just say to yourself, okay, I look like we're on the bottom of the range, and this is really how much this is important right here at this area at 70.23-ish level. You can see it right there. I mean, we capitulated here back in 2015, so this is very important. This goes back to 2005, 2004. So this area of 70.23 is really very, very important. So just be aware of that and just trade responsibly, especially if you see it break this area. You're responsible to actually short it, to take that advantage that it breaks this support level. Now, jumping into the Canadian dollar, USD CAD has been very weak. Now, we're looking at a daily chart. Let's jump into a 4-hour chart just to give you an idea. The levels of this, the volatility has been crazy, okay, mostly because of political issues. The Prime Minister is under some trouble over there in Canada, and the price of oil is not too hot, and the trade agreement between Canada and the United States was reshuffled. So a lot of things happening, okay? And this is what I talked about earlier back when Trump was meeting with the G7 meetings back in November, December time. And this is, kind of like the aftershocks effects of it, okay? Now, we went from 131 up to 133.60-ish level. We're right there at resistance. Now, for you to fully appreciate this resistance level, again, we got to go into a daily chart. Okay, now looking at this daily chart, you can see this 133 has been resistance right there, and right there. Okay, and we're really hovering about it right now as this rate decision comes out today. Ironic, right? No, not ironic. Usually when we're hitting at some sort of resistance, some sort of support, like we saw the Aussie dollar with the other day when it came out the rate decision, it was also hovering about support level. Here we're hovering at resistance level because the dollar is traded against the Canadian dollar here. So this is actually means if the Canadian dollar goes up here, then it means the Canadian dollar is weaker, okay? 135 to the dollar, okay? So couple of options here. Okay, with the number going in, I don't suggest anybody has any positions going into the number. However, if we falter this area, if we sell off sharply, I think we're going to hit back to this 132-ish level 50. However, if we break this area right here above 133.87, we could see it hit this 134-ish level. Not even a question, okay? So be aware of it. I wouldn't chase this thing because it may just flip you, in a couple of scenarios, may break that resistance level and then correct itself down on the down level. So it's I'm a little bit hesitant to jump into this number either before the news or even after the news because we're at just such a sensitive point right now. Now looking at gold and oil, really flattened here. We are trading at 1289-ish level. We hit a bottom of 1280 yesterday, okay, which is support level previously. You could see that. So with that said, expect us to bounce off of it. The question is how far and how much. I mean, given that we've already gone up 150 points, corrected ourselves about 50 points on the downside, so we're about 70 to 80 points above where we were from the beginning of the year. Altogether, this is very healthy. I do expect us to trade within a range and continue trading within a range. I'm not sure that gold is going to go back to 1348-ish level, okay? As we, go into the next session of trading, remember today's March, and March is the month of expiration. So going into the next 6 months, I think we're going to be just trading in a very tight range. I think we're going to be between 1293 and 1270-ish level, maybe if we break that area, maybe on the external part 1312, okay? But I don't think we're going back to 1343-ish level. And the reason I say that is because the Dow Jones is pretty much corrected itself, okay? Now we're looking at a weekly chart here. Let's look at a 4-hour chart, and you can see pretty much that we've kind of come back from the brinks of, of death or from earlier this year. And now we've just been hovering around this area. Now we bounce off of this support level of 25,695 after hitting this upper range of 26,200-ish level, just shy of it, right? And we had this nosedive earlier this week. So the question is it just waiting for NFP at the end of the week to give us some kind of confirmation that we'll maybe bounce off of it? Is it also because of China and the United States a little bit still in quandary as to what's going to happen with the trade agreement? I don't know, okay? I do know that, the stocks are getting a little bit stronger. When we look at the major stocks, they are getting a little bit stronger. So, with that said, we're only 1,000 points of our all-time highs. So, considering that we've gone up over 3,000 points over the past 2 months, to give it a little bit of a break here of selling off about 300 points, warranted, okay? Very warranted. Now jumping into that JSC, before we look at Facebook, this was the area we meant to break, 50,000. Okay, now we didn't break it, and we're hovering right now this morning in the middle of that 49,789-ish level. On the bottom side, 49,435. So we're really in the middle of these two ranges, okay? And, we're hovering along the upper end of it, okay? If we look at a 30-minute chart, you can see that a little bit clearer. And so the question is when is this going to break above? Okay, it broke to 50,331, but didn't sustain it. I would have liked to see it sustain it. So for right now, I still think we're going to be trading sideways until there's going to have some sort of impetus to move us higher. So keep an eye on this later today as well. Just you want it on your radar because as soon as it breaks 50,000, I think we could push it a little bit higher. Now jumping into that Facebook stock, okay, this was a beautiful rally we had earlier this week. Just this week alone, we had a 10-point rally to all-time highs of 170. Question is, will we break above it? Okay, that's really the question of the day, and I'd like to see that actually happen, as this is really making a little bit of a correction on the upside, maybe even hit $180 a share. Okay, if it does break this, it could definitely hit that next 187-ish level. Okay, that's my target, so keep an eye on this. This is really momentous. If it does correct itself, it could go back to 165. Okay, but keep an eye on this today because I think, it's had several days. If you look at a 30-day moving average, it had several days of some momentum on the upside, as you can see here over the past couple of days. That shows momentum, that shows buying, that shows follow through, but I'd like to see it break above, forget that confirmation. This is Fred Razak. I want to wish you guys a great trading day. Thank you.